This is not Raghuram Rajan. It is Yellen disguised as Raghuram Rajan or Santa Claus disguised as Raghuram Rajan.
I don't know what you want to call me. Santa Claus is what Lata called me earlier. You want to call me a hawk? I don't know. I don't go by these things. My name is Raghuram Rajan and I do what I do.
Oh, that clearly was the dialogue of the day, was it not? My name is Raghuram Rajan and I do what I do. That's taken the internet by storm, Surbi, but the markets have also been on a rollercoaster ride of their own.
Absolutely, and as you said it, I mean, that one comment went as viral, if not more than the 50 basis points rate cut headline. But what a day for our markets. We've got a lot of ground to cover. Let's straight away get started with the headlines. The RBI triggers a roller coaster ride on Dalal Street with its bigger than expected rate cut, with Nifty gyrates in a 230-point band to finally close around the 7850 mark. Well, that's about a 0.6% gain. The Sensex puts on 161 points. Rate-sensitive stocks see smart gains. The Bank Nifty gains 1%.
And it's the Diwali bonanza from Governor Rajan that engineered the rally. The Reserve Bank surprises with an aggressive 50 basis points repo rate cut and says it will maintain an accommodative policy stance. The Reserve Bank cuts India's GDP target, though, for FY16 to 7.4% from 7.6% earlier, and lowers the CPI inflation forecast for January 2016 to 5.8%.
RBI talks tough on monetary policy transmission and banks begin to give in. SBI cuts its base rate by 40 basis points. Arundhati Bhattacharya tells CNBC TV 18 that the bank will also be lowering its deposit rates but may still face a slight pressure on margins with the base rate cut.
And mid-caps stay muted through the volatility, with the index closing flat. Rate-sensitive stocks like Indiabulls Real Estate, HDIL and LIC Housing Finance see some smart gains. Sri Renuka falls over 3% after its Brazilian subsidiaries apply for financial restructuring under Chapter 11. All right, those were all the top headlines, and here are the experts that we have lined up for you on the show. We listen in to RBI Governor Raghuram Rajan's policy statements, and we'll also get you a 360-degree analysis of what bankers, market experts and economists have made of that. Gautam Chowcharia of UBS Securities will also join in with his take on the markets.
So let's tell you what happened today. Markets cheered Raghuram Rajan's rate cut. The bulls were all over the place by midday, and the Nifty had reached the 7,900 mark. But then in the last few hours of trade, the rally lost some of that steam and momentum. Most of the gains got wiped out. However, not to worry, we've still had a positive close for the day as a whole. We've got Anuj now joining in with all the details. Anuj, the Rajan rally taking shape, but not quite closing at the day's high.
Well, tough question on why the rally fizzled out, but an easy answer is that October is going to be one really volatile series, and the evidence is now in place with the first couple of days. Look, today it was so volatile that Nifty did see 76XX and 79XX. So, I mean, it was that kind of a day. The market opened gap down because of global cues. Then we had that 50 basis point rate cut. Nifty rallied 230-point intraday from that point on, and then it fell 85 points from day's high. Actually, it fell more than 100 points. The averaging meant that the fall from high was only 85 points. So the Nifty actually ended somewhere in the middle of the high point and the low point. So both bulls and bears could claim victory in today's trade. Let's talk about some of the stocks then that led the market higher first. Rate-sensitive stocks, which would have the companies which would benefit from the rate cut. So stocks like HDFC, Maruti Suzuki, M&M were all higher. Maruti, in fact, made a new lifetime high in today's trade. Some other stocks that gained today: HDFC Bank, that was higher by about close to 2%. Infosys was higher 1.5%, and Tata Motors finally had a relief rally up about 1%. Metal stocks, on the other hand, were clearly weighed down by global cues. So stocks like Vedanta, Tata Steel, Hindalco, all down between 3.5% to 5.5% in today's trade. And some other prominent Nifty losers in trade today included stocks like BPCL, Bosch and Dr. Reddy's, all down between 3 to 4% in today's trade. Outside the index, few gainers that stood out in trade today, some of them of course reacting to policy. HDIL up 9%, LIC Housing Finance up 6%, and NCC was higher by about 5%. And on the losing side, in the non-index category, you had stocks like Bharti Infratel down 5%, Dish TV down about 3.25%, and Bata, which was down about 3.5%. So the thesis remains intact. This really is going to be a very volatile series. For now, the market has yet again shown that it wants to defend 7,800. That's an important support mark for the Nifty, because if that's gone on closing basis, you're asking for trouble. But at every high level, there are bears waiting and there's selling in place, which is taking place at high levels. So it's going to be an interesting series to watch out for.
Oh yes, indeed, Anuj. It will be an interesting series. In fact, the market lost some of its euphoria through the course of the day and came off from the high point quite a bit. The Nifty lost about 80-odd points from the top. The Bank Nifty was down almost 180 points from the top. So once again, by the end of the day, the market realized that the global cues continue to be dominant across the markets, and that's something that the market will continue to watch very closely and start tracking tomorrow onwards. However, we got a lot of market reactions coming in. Nirmal Jain, the chairman of IIFL, believes that this 50 basis points rate cut that we got from the RBI is a game changer for the markets. Listen in.
I would say this could be a game changer. Today markets, we should see in the context of global markets, because Asian markets and global markets have been very weak. So, but for this pleasant surprise or a very decisive cut in the rate, I think markets would have been, and as you know, that before the policy announcement, markets were significantly lower. So markets will continue to be guided by global factors, but within that, if you take a medium to long-term view, then I think India has a great opportunity to turn around. So I think he has taken the rational decision to do the rate cut by 50 basis point, and maybe a 25 basis point probably would not have been good enough for two things. For the market is one, but more importantly, even for transmission by banks, because they are still reeling under NPA and cost issues.
Okay, so that was one of the very clear reactions that we got from the market after that mega move. Now let's talk about the move itself. My name is Raghuram Rajan and I do what I do. With that punchline, the RBI governor has managed to silence many critics who were blaming high interest rates for the slower growth rate. In a landmark monetary policy, the central bank has cut rates by 50 basis points, and that is much higher than street expectations. The repo rate now stands at 6.75%, the lowest since March 2011. The governor also nudged banks to transmit the rate cuts. He promised to work with the government to remove roadblocks for banks cutting their interest rates.
Transmission, there are various impediments, as we said in the policy, including our own regulations, which we have to examine to make sure that banks have the ability to transmit, given regulations on things like the base rate. So what we're going to do is work on a variety of dimensions. From our side, we ensure that liquidity is plentifully supplied. We don't want excess, and the natural state of this economy with slight deficit in liquidity, which we supply. So the intent is to be there. The intent is to keep rates in the money market close to the policy rate, which is 6.75 going forward. While the Reserve Bank's stance will continue to be accommodative, the focus of monetary action for the near term will shift to working with the government to ensure that impediments to banks passing on the bulk of the cumulative 125 basis points cut in the policy rate are removed. This includes, amongst other things, reviewing small savings rates.
All right, well, Lata Venkatesh joins us now with her take on the RBI action and its commentary. Lata, what have you made of this monetary policy, and could we expect more rate cuts in the future?
I would call it a landmark credit policy or monetary policy. One, it's not just the rate cut. There are a whole host of other things. SLR is going to be brought down. And that is the sign of a mature economy, that the government should not preempt the bank deposits of citizens. That is being brought down, and the government has been given adequate warning, 18 months warning, that we are going to not give you these deposits for a free ride. That's a very healthy sign. It's confidence that there will be others who will be willing to pick up the government bonds. Also an incremental way in which foreign investors can invest in Indian bonds. 5% of the total outstanding deposits. So there's something for everyone, if you notice. I was a little surprised that the Bank Nifty did not respond positively, which it indeed has, with a little bit of an hour's lag. That there is definite benefit for banks, because bond prices will rise and they will make mark-to-market gains, as well as, you have to keep lower and lower SLR. That will give you more space to lend to the corporate sector as well. And then there is the most significant evidence of the RBI thinking that the war over inflation is won by saying that its forecast for inflation in the fourth quarter of the next fiscal, that is Jan-March 2017, is 4.8. Just about a year ago, we were battling double-digit inflation. It is a measure of cleansing, a measure of dieting and getting into shape that the economy has done, that a very conservative inflation warrior like Raghuram Rajan thinks that you are going to get to 4.8%. He won't give you that forecast lightly. It is coming from a very, very academically respected voice and a very conservative governor at that. So for me, the landmark number over there is that 4.8% target, which means we have won our victory over double-digit inflation and high inflation for good. That 4.8% forecast gives me the confidence that there are more rate cuts sometime in the distance, maybe 9 months down the line, probably 6 months down the line. But there is scope for more rate cuts. Now, the negative in the whole thing is that much of this confidence in inflation is also coming because of a very poor comment on growth. The governor is not expecting investment to take off, which is why he is giving consumption a prop by lowering rates. Investment, there is so much of underutilization of capacity, he points out, what in economic parlance you call output gap. There's so much that even when growth picks up, inflation is going to fall because growth can easily be accommodated by existing capacities. Also, the comment on global growth is very, very negative. So don't expect exports to take off in a hurry. And all this is coming from a man who has called the global economy correct several times in the past, been a contrarian and has been right. So if he says that he sees 2016 global economy in a tight spot, you have to take it very seriously. So there are that negative comments on growth which we definitely have to take on board, and I don't think the global economy and economists will take that lightly. But the comment on Indian economy and its macros improving is solid.